You want to buy, you want to hold it for 20 years. Then if the price is correct and you have the ready to put a different coffee money in, you do it. Don't go on reading about, bonus and all this. All those are things to hook you and give you FOMO to make you do things. You pay attention to your fundamentals. If you lose sight of your fundamentals and you start paying attention to all this other jigana hanging, glitter hanging, you will slip and fall in no time. Because what will happen is you will forget your fundamental analysis itself. You'll forget what you read and what you've understood and what you believe, because all this noise is starting to occupy your memory. You do not know what you're doing, then you just start buying stupid things. So be careful of that. Welcome to the podcast on Sunday morning. Without wasting any further time, here me and Dhana talking about the Patas list part 2.
InvIT, sir.
InvIT. I think InvIT has reached a point where you can consider it. It was on the higher side, it has corrected quite a bit. But if you're looking at banking, now if you look at it, IDFC, then also Karnataka Bank. Karnataka Bank has also corrected quite heavily, and it looks very opportunistic because it's all trading below price to book, which is a fundamental ratio which Anand has told us to look at. Karnataka Bank is well below 1. I think it's at 0.7 or 0.8. Which is a fabulous place to be in. And that's a growing bank. We've spoken about that bank in another video. So that is something great to consider. So if you had to take InvIT, and you're taking Karnataka Bank, and you're taking IDFC, and let's say you want to argue, you want to put HDFC also into the mix. HDFC, I will not put it in, okay? So if you look into these things, I would say Karnataka Bank should be on the top of your list. If you had to put it in order.
And about the PG InvIT, sir, 88, 87.
PG InvIT.
For the dividend purpose.
Dividend purpose, it makes sense. The problem with our audience is they buy PG InvIT not for the dividend sake. They're buying PG InvIT thinking it is a appreciation of capital. That company's appreciation of capital is not going to be fundamentally anything great, because whatever profit they make, whatever money they make, they pay it out as a dividend. Right? And the only way that company grows is, what do? They help acquire infrastructure, then they collect money for that infrastructure. And how do they finance that infrastructure? They themselves are borrowing money. So they themselves are very sensitive to borrowing cost. So if the interest rate goes up, it affects their cost, meaning the amount of profit they make is affected. So all this fluctuates their price. All this fluctuates the dividend payout. So you should keep that in mind before you buy this PG InvIT. Our guys do not do all this analysis. They look at it as if it's some penny stock or some cheap stock which you buy and it's going to go all the way to sky high. It's not going to.
88 to 200.
Yeah. And no matter how much I'm explaining the fundamentals of what an infrastructure investment trust is, people do not pay attention to that. They're looking at this as some other company, and it's not. So first understand what an infrastructure investment trust is, then understand what PG InvIT is, see how they finance their business, see why interest rates affects them, then understand why the price movement is there, then invest. Our boys do not do any of that. They say, Anand sir said, you said, Dhana said, so I bought. Now they'll not buy 1, 2. They'll buy immediately 1,000.
Lump sum.
Yeah, 8,000 rupees, some 10,000 rupees they'll buy. Right? Sir said you put because it's better than FD, something. They'll give me some reasoning and they're saying I put off 1 lakh, took out my FD. I'm like, why? You first understand, then you do. If you don't understand, then you won't do. And another thing is these dividend payouts, each company differs. Some they give quarter-wise, some give semi-annually, some give annually. So understand everything before you do it, right? And always understand, in an FD, whenever you have the money needed, you can crack that FD open and take your money out. Like in a bond, you can sell it and take it out. In a stock, you want your money today suddenly, for some reason, some family emergency. You will have to take the price, whatever the market gives you.
Correct, sir.
So are you ready for that? That analysis also they do not do in PG InvIT. They only look at saying, FD kind of return, and they get, then the price goes down and they're like hurting, So that's why I say I don't talk about it at all. But I do chat about it on my Instagram channel, which you've seen. But more than this, I cannot give, because each guy, new viewer comes. I'll understand if our class is like a college class and it's a stable population. So I've spoken it once, it's understood. The problem is we have floating population. We're like standing on the platform like a railway conductor screaming. Wah, wah, wah. So each time one guy will come and say, sir, which platform, sir? I'll tell him, platform number 2. Then 5 minutes later, another guy will come and say, sir, which platform, sir? I'll be like, platform number 2. Then, sir, which? I can't tell the guy, hey, how many times will I tell you? He'll be like, sir, I have not told you, you've not told me. So I can't get angry with the audience either. Because this is the first time they're seeing our video. They will not see old catalog. Who's going to visit and see our old catalog of your face and my face? A year back where we spoke about PG InvIT. It's too much effort for our viewers to Google it also. Right. So we are in this position where they keep asking, we'll keep answering.
Then
Platform number 2.
Then the Tata company shares, sir. Tata Motors.
Right. Tata companies, yes. Wait, Tata companies is a separate ecosystem altogether. Right? Tatas, you do not compare them to regular companies the way you compare it. Tata companies, most of them are overvalued and most of them are become diamond needles. So you have to wait. When you see an opportunity in Tatas, you can buy. Unfortunately, right now, the news cycles, what is happening in Tata Group with Tata Sun and the RBI and everything, lots of like Tata Chemicals is being pushed up. Why is Tata Chemicals being pushed up? Not because the earnings are great or they got some new order or something like that. It's because of the relationship between Tata Chemicals and Tata and Sons. Right? So people are making lots of plays on that, and these things are prices are moving. Tomorrow, RBI and Tata Sons come to some agreement. Or Tata Sons says, you know, we are going to take some other course of action. You might see the price going like this. So be ready for that. Other than that, when you see a value, like Tata Motors is in value. The problem with our audience is when they see the value, that time they think it's waste. The minute it's gone to unbelievable value like Trent, then they'll say, sir, when can we buy Trent? Tomorrow Trent price crashes and it becomes 100 rupees. I'll say, let's buy Trent. They'll say, sir, what are you saying? The company's become useless. Who will buy Trent? Like ITC, for some godforsaken reason, when it was 500 plus, everyone was asking, should we buy? Should we buy? The time I was saying, yes, it's a great company. Now it's corrected. Yeah, 460. Everyone's saying, no, sir, something is fundamentally wrong. I'm like, what are you saying this? Right? If you are going to hold ITC for 10 years, my brother spoke about ITC. He spoke about ITC hotels. What is all the opportunities, everything. So if you believe in that and you're holding it for 10 years, what are you worried about? But our boys don't do that. They'll read some tidbits here and there. And they'll just look at the price chart and say, sir, no, it's become dangerous. So ITC is great.
ITC is great. Tata Motors.
Yes, but if you have the courage, you can do.
And last one, we need to conclude with the Pharma stock, sir.
Pharma stocks. Well, pharma stocks, lots of them are expensive, right? The only thing which you can look at remotely and look at terms of earnings and price and say you can look at it is Natco. And everyone's freaking out about Dr. Reddy because of the share split thing. I don't think there's fundamentally going to be any change in PE. So wait for some time. Post split, you can see. But if you're buying the share for split, there's no advantage in buying for split. There's no trade to be made in the split. It's a very small arbitrage. Unless you're buying 5 crores worth of Dr. Reddy, then of course some split arbitrage you can see probably. For us, for you and me at Tiffin Coffee, where we're struggling to buy one share, yeah, you're not going to see any great return in the split. Okay.
If the split will happen, then small investors can also enter.
Yes, they can enter. The bar entry level comes.
Entry level comes low.
Okay, lower. Not lower, but lower. Okay. Chalo. Thanks for watching the video. The podcast. I hope you enjoyed what me and Dhana offered you this weekend. Do subscribe to the Instagram handle where Dhana is available and feed him your questions and we'll try and get them answered here. And we do appear on MoneyPechu channel also where we do a weekly podcast kind of lessons over there. So you can catch us there too. Other than that, anything else you want to say?
No, sir.
So thanks for watching the podcast and we'll see you again next weekend.
Thank you.